we've got prospects for economic growth and so corporate profitability, the main impetus for the Kenyan markets right now. We've been hovering around 2010 highs. How keenly are you eyeing the high that was hit in 2007 of 6,161 points?
I think we're some way away from that. I think we need to see GDP go up a few notches. We're currently running at about a 5% GDP rate. I think if you can see an acceleration into the 7 to 10% range, then that high that goes back to the year you called, it would be back in sight. But currently, I think that's quite a long way away. I'm looking for the sort of 5,200 to 5,400 range, probably at the end of the year or first quarter.
Well, if we're looking at the corrections that are being witnessed on a daily basis, I mean, what's your view on that? Because, you know, we rise ever so slightly and then fall back ever so slightly, you know, day on day. Are you seeing them as short-lived and shallow more than anything else?
Absolutely. They've been short-lived and shallow all year, and corrections have been very orderly. They have not been of any great magnitude. And I think we're seeing the similar pattern play out. I think a lot of people were looking for a little bit more acceleration, but I expect we're going to get between 10 to 15% before the year is out. And I think, you know, you're seeing continued good long-term demand for stocks. I'll give you the example of Serena Group, where Proparco took a 15% stake. Proparco is not hot money, it's medium-term to long-term money, and we're seeing this play out across the universe of the index. So I'm pretty confident about where we're at. I agree we do have these sort of bouts of profit taking, but more often than not, it's a bunch of low ticking that's going on in certain stocks in order to keep the index under a little bit of pressure. It seems to me more that the low ticking is being managed a little bit, and that's what's spoiling the picture.
I had highlighted last week, though, that towards the end of last month, we had Citi Bank say that Kenyan stocks were largely looking very expensive relative to other markets of a similar size. What are you making of current valuations that are on offer, Aly Khan?
Well, I think, you know, that you've got to look both at the trailing PE and then you've got to look at the forward PE. The forward PE becomes the existing PE very soon once we turn the corner at year end. And when you look at that, you can see that there's, you know, the very expensive PE stocks are going to surely turn around at the beginning of the year, and you're going to see much more attractive PE levels. So I think Citibank, on balance, are looking at a trailing PE and not at the forward PE. And I think that's what's getting them a little bit confused.
Well, we've certainly got foreigners, cognizant of the kind of value that is out there. I was reading through some of your notes last week where you'd highlighted when it comes to Athi River Mining, the majority shareholder and CEO confirmed that he was being courted by the Asians and that he did not see himself running a cement company in 5 years. That's a pretty interesting news to have come to the surface.
Well, very much. I think it's the big come and get me notice he's put out there. He did it in Washington, some way away from Nairobi. But very clearly, we've seen a lot of activity in Athi River Mining, way above its historical moving averages. I think there's somebody accumulating stock, and I think it's very much in play. It's a tremendous story, Athi River. He's executed with near perfection. He's scaled up the cement capacity, particularly in Tanzania, right ahead of this expansion that we're seeing in GDP. But obviously, he's signaling that, you know, he's ready to be taken out at the right price. And I think somebody will definitely take him out a little bit higher than here.
What would be the right price in your books for a player like Athi River Mining?
Well, I think, you know, we're currently at about 175. 180 was an all-time high. I think if you're going to take out Athi River, you're going to have to pay a small premium. I would be looking for between 200 and 220. Nothing excessive, but at least a 10 to 20% premium.
Especially a premium in a context where we're seeing property development on the rise. The latest company to have sold off its coffee farm, Egads, paving the way for that Tatu business center. This is a topic that we've discussed with you before. I mean, what are you making of that development? Because Egads specifically has been one of the highest gainers at the NSE over the past 12 months.
It's currently trading at about 54.50. I've got a breakup value if they revalue the property of about 400 shillings. So there's tremendous upside. It's the same story across all these agricultural counters practically. Most of them had their tea and coffee estates on the Thika superhighway, which is seen as super spike in real estate prices. It's pretty unbelievable what's happened down that road. And my disappointment is that it took a New Zealander from Russia to come to Kenya to show our people how to create shareholder value. That's what really disappoints me. I think the other agricultural companies are now going to be looked at very keenly, and they've really got to wake up and smell the coffee and actually convert the coffee estates into real estate, because that's the way to extract enormous outsized value for shareholders. And as far as I'm aware, that's the job management has to be performing too. And as far as I can see, a lot of these guys have just been sleeping, and Jennings has come and has really given them a wake-up call of a nature which is, it's ringing very loudly indeed.